Good afternoon, everyone. Renisha from Commodities Research. Today we have released a report on monthly commodity globe, and I'm here to give my views and a brief idea of that report. November 2010 was very eventful month where commodities saw great volatility. Silver was the best performer in the pack, rising 14% at COMEX and 16% at MCX, while zinc was the worst performer, falling 10% at MCX and 13% at LME. Rupee appreciated 3.5% in November, moving from 44 to 46, and this boosted bullishness in commodities. Initial few days of the month was very bullish for the commodities, as after 3 months of speculation, Federal Reserve finally announced to buy $600 billion of treasury securities to support the struggling US economy. Commodity reacted positively to this news and traded higher. Gold surpassed 1400 level and by building 1425 a landmark, whereas silver continued making 30-year high of 29.34. Copper also traded to a new record high of 8,966. Crude oil traded at a 2-year high above $89 as major oil agencies raised their forecast for global oil demand for 2010 and 2011. Then in mid-month, market focus shifted from QE2 to G20 currency and trade tensions. Speculation that Chinese government will accelerate tightening measures by raising interest rate dampened risk appetite. Commodities fell the most in 18 months on speculation that China will increase borrowing costs to dampen inflation, eroding demand for crops, metals and energy. Raising rates has a negative psychological effect and will put a brake on rising demand. The dollar rebounded across the board as financial leaders and economists from around the world criticized US easing measures. Gold got slammed 5% from its high, silver fell 12% from its high, copper and crude oil fell 9% from its high. Later, geopolitical tensions broke out between North Korea and South Korea, and energy and precious metals rebounded from their lows. Supporting to this, investors were also thrilled as Ireland submitted application for funding from EU and IMF. Finally, EU and IMF agreed to pay Ireland a loan package of 85 billion euros on 29 November. Ireland was the second country after Greece to seek bailout from EU. The market currently expects Portugal and Spain will be the third and the fourth country to knock the door. After being blooded and bruised for several weeks, dollar emerged as a safe haven in the scenario of geopolitical tensions in Korea and macroeconomic uncertainty in Eurozone. Dollar index ended this month raising 5% from levels of 76 to 81, whereas euro dollar was better down throughout the month, falling 7% from the levels of 7.43 to falling from 1.43 to 1.30. Gold and silver correlation with euro dollar have fallen sharply over the past few sessions, suggesting euro's weakness because of sovereign concerns may not necessarily weigh on precious metal prices. Indeed, investors may turn to those metals as safe haven assets as they lose confidence in fiat currencies. The base metal complex remain weak as Shanghai Future Exchange has said that it will raise margins for copper, aluminium, steel wire, gold and fuel to 10% effective from 29 November. This marks the latest view of China to curb speculation and cool inflation. China's measure to increase margin, dampen speculation and lower risk appetite. This follows 19th November move when China interest rates were raised for the 5th time in this year. So speculation of further tightening from the Chinese government have affected the sentiment. That said, some metal in the complex continue to possess bullish fundamentals. I caution that the price movement will be volatile in the near term as market sentiment remain fragile and lingering concerns over sovereign crisis in the European periphery and acceleration in Chinese tightening and geopolitical tensions among the Korean peninsula will be there. and will be in the spotlight. War and geopolitical tensions always induce fear and trigger investors to sell risky assets like commodities. However, safe haven assets such as precious metals should be supported. Commodities are currently looking very strong and would trade positive for the month of December. Gold has cleared the important resistance of $1385. Now the next target is $1400 and then $1425. Silver has also cleared the important resistance of $28. The next target is $30 and $33. And I suppose that gold and silver would create a new high in the month of December. Crude oil is in the range of $80 to $88, while copper has supported $7900 and resistance at $8900. So this was a brief view on commodities for the next month. For details, please read to our monthly file and get a clear idea. So happy trading. Bye for now.